Ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm going to take a look at three different currency pairs, not the usual euro, dollar, yen, and sterling versus US dollar, but I'm going to look at the commodity currency pairs led by the dollar versus Canada. They just had their interest rate decision. Then I'll take a look at the Aussie dollar and the New Zealand dollar. So let's get started. The Bank of Canada interest rate decision came in unchanged. They took out a line in the statement about potential hikes, which was as expected. Adam points out that growth is slowing. That is going to eventually lead to lower inflation. That may also be weakening the Canadian dollar as well. But technically, we are seeing a tilt more to the upside. I outlined this in my pre-decision video, where I pointed out that the price needed to get above the 100 and 200 hour moving averages. That's a blue and green line in this chart. It also needed to get above the 200 day moving average. That's this green line, this green overlay line on the chart. The hourly moving averages come in around the 134.64 level. The 200-day moving average comes in at 134.82. And as you can see, the price moved above the 200-day moving average. It has moved back below that level, but we did not get to the 100 and 200 hour moving averages, and we are seeing a rotation back to the upside, currently trading just above the 200-day moving average. So did we see the break, retrace, move back higher? That is what buyers will be looking for now going forward. If the price can now extend to the upside, make new highs, that would open the door for further upside momentum. Look toward the 135.17 level, maybe toward this high price right here, which comes in at 135.187, and then the high price that we saw in trading last week. That high reached all the way up to 135.33. So that's the regression to the upside, but certainly staying above the 200-day moving average and the 100 and 200-hour moving average is giving this pair a boost from a technical perspective. Let's take a look at the Aussie versus US dollar next, and we're going to look at the 4-hour chart. And in trading this week, we've seen ups and down price action, and that price action has taken the price above and below this green line right here. This green line is the overlay of the 200-day moving average. It also took the price above and below the 50% retracement level of the move up from this low right here. This is the October low to the high price that we saw in December. The 50% comes in at 0.6569. So that area between 0.65699 and 0.65777 is going to be the barometer for bullish above and bearish below going forward, since we're breaking more to the upside. Now, the high price that we saw in trading here today has come up to a target area. This target area, I'm going to put a horizontal line here, goes back to this period right through here where we broke below this level, use this level as resistance right here, and then did it again here, and then broke above it here and moved to our high price. We came down to that area in trading last week, traded above and below it, and then used that level as resistance here and here. And as you can see, the price highs today came up to that level on two separate occasions near the 0.66199 level, and found willing sellers on the 4-hour bars. So there is some reluctance to move to the upside against that ceiling level. But if we do break above it, then we'd have traders looking toward the 38.2% retracement, and then toward the falling 100 bar moving average on the 4-hour chart at 0.6658. Conversely, you don't want to see the price move back below the 200-day moving average. That would just be a no-no from a technical perspective. So keep that level in mind. The level comes in at 0.6577. Let's take a quick look at the hourly chart to see what that is telling us. And if we let's get over here. And we can see that the price action has been above and below the 200-hour moving average. No, it's not all that great. We're going to need to see the price stay above that 200-hour moving average in order to give me more confidence of a move to the upside. So be aware of that. What we don't want to see probably is a move back below the 100-hour moving average, and here's that 200-day moving average. That would be a no-no for the downside. So watch the 0.6599 level. It's a nice little round number around 0.66 as a barometer in the short term. We need to stay above that level. We tried to get above the 200 here and failed, and then it wasn't until all the way back to the end of December, early January, that the price stayed above the 200-hour moving average for any extended period of time in the Aussie versus US dollar. Finally, Let's take a look at the New Zealand versus a US dollar. This is on the 4-hour chart to start off, and the price action this week, like the Aussie versus US dollar, was up and down, and in the process moved above and below its 200-day moving average. That's a green overlay line right through here. And trading last week, the price tried to hold support against that level on a number of different bars right through here and did a pretty good job of it. The problem was the price didn't go very high off of those rebounds. In trading this week, the price moved below the levels and traded above and below it. But the last thing the market has done in trading today against that 200-day moving average was to move above and then find support buyers against it and push the price to the upside. So buyers are making a play. We'll see if they can continue that play to the upside. Now, this swing area at 0.6112 and 0.6125 is now going to be a close support level. If the price is able to stay above this swing area, I'm going to give the buyers the benefit of the doubt, and I would expect that we should see further upside momentum, basing and a move back to the upside. Getting back above the broken 38.2% retracement would be another key target to get to and through. Note that at the lows this week, the price did break below the 50% retracement level of the move up from the October low to the high that we saw in December. That should have been led to lower levels in the New Zealand versus US dollar, and perhaps a test of the 100-day moving average. That's this moving average right here. But as you can see, each of the breaks below those levels could not sustain momentum. The price moved higher, ultimately extending back above the 200-day moving average and trading today. So there you have it, a look at three of the major commodity currency pairs. And I hope you found this video interesting. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.